Good afternoon, everyone. Hope everyone's doing well. Um, so we are Sunday, August 2nd. Today I wanted to, first of all, it's been a while. I haven't done any videos, so I thought I would go over some market profile analysis. Before I proceed, I want to basically cover a couple of questions that I get from new traders on Twitter or by email. And I've got some questions that were asked, and I think I've covered most of these in my videos, but I still wanted to cover it now. This way, it's done. So basically, I use Sierra charts for my market profile, the context, and also for the charting. This is just a regular chart here on on NASDAQ and also on market profile with NASDAQ here. Other than that, I use Jigsaw for the depth of market. This is the Jigsaw here. I've kind of customized it, the tape on the right side here of Enqueue. This is basically how Friday ended. I just didn't close down. I didn't shut down Jigsaw on the weekend. So the footprint and all that has stayed the same. For some reason the profile is, yeah, it's here actually, so I could, on Jigsaw, what's good is that I could play around with the width of the profile and make it bigger or smaller, and for some reason now it seems to not want to work, but okay, anyway. So this is a Jigsaw, so I use Jigsaw regularly, just for my trading, to execute on it. And that was a question that I was getting a lot. And also little nuances on Sierra charts. So basically, Sierra charts, you can open charts that are candlestick charts, and then you can have charts with footprint. I normally use two or three different screens, so I don't have all my screens here, but I'm just going to show you here the footprint. So basically, this is the footprint of ES. I believe it's a 30-minute footprint. Yeah, 30 minutes. So you've got all the deltas, the profile on the side here, which I don't really use very often, but it's just there in case I want to look at the auction of the last 30 minutes. So if you're able to see here, this candle here, sorry, this one here is the open of Friday. That was Friday's footprint, the first 9:30 Eastern candle. For me, what's important here is basically, I want to just see how the auction is going, how the market is auctioning around. So here, the first 30 minutes, and then the next two 30-minute candles were up candles, and you're able to customize this with Sierra charts. Very customizable. The colors, the way you want this. I had this built by a friend, and I like the coloring, so I used to just only use red and blue, and now I kind of like this coloring. But like I said, uh, well, throughout the time, you kind of evolve as a trader, so I don't really look at this very often, but some traders have been asking me, do you look at the footprint and all that? Well, that's it. On Jigsaw, what's good is you see the footprint here. I mean, at this level here, you see three came in, four. At the highs here at this level here, and then I just like to have Sierra charts, volume profile and market profile on the left like this, just to give me the context, because I use mostly this profile and then execute on Jigsaw here, depending on what kind of direction I'm looking at, what I'm biased at. This is the profile, sorry, the tape here on the right. So I like to use the tape here on Enqueue. My settings are not complicated. It's basically 3 and above, and I just like to have Enqueue blocks more than 10. And this is just a regular Enqueue tape to give me, you know, the directional bias. If it's totally purple and red, it just means that the sellers are all over this, and I might have to be a bit cautious on the long side. It's just a quick way of, for me, for my eyes, to see who's in control. I have the blocks set up with these colorings here, and this way I could, again, this is Friday's close, so this tape isn't really important at the moment. But if you look at how it's structured here, you see, like when we have red big blocks coming in, it just basically shows me this. NASDAQ is a bit more, it's a bit less liquid compared to ES. So you don't need to see the big 20, 40 lots in NQ. I think above 3, 4, 5 is already important. And this is just the one lots and the three lots and the regular lots just coming in to see the flow of the market. How, is it mostly bearish? Is it mostly bullish? I just want to visually see that. Yeah, I mean, look, everyone's got this customized to their way, and this is my way of, with experience, I've just noticed that it's helping me with the Sierra charts. Another question I was getting is, look, this is a profile, and then you have Sierra charts, this is the regular window, okay? On the regular window, you could have various charts. This is gold, and then I have the ES profile, and then I have a footprint here. Let's say I want to take this screen, or sorry, this chart, and I want to put it onto my other screen. Like I said, I have three screens here. I mostly trade off this screen in front of me with the Jigsaw dome and everything. But you can go to Windows, and then you can detach, attach, and then this is going to detach this window here, and it's going to put it to the left or to the right, whichever screen you want to play with. So that's a feature that I was getting some questions on. I mean, obviously you can get all this through Sierra's regular support and everything, but sometimes we're not all accustomed to learning every profile, every platform all that easily. Just gonna put my Enqueue here. So what I'm gonna do today is mostly cover NASDAQ's last couple of days. Put some. You see, this is blank. I have nothing, no lines, nothing here. I'm gonna basically do this from scratch. I'm going to analyze maybe the last 10 days, let's say, just to see what the market's been doing. If we go to this here, this candle that went down, it's July 12th. So since July 12th, we hit a high here at 11,603, and we came to retest that on July 20th, and we've been kind of hovering between 10,300 and 11,000 in the last 2 weeks here on NASDAQ. If we just scroll back a bit, it's going to give us a better picture here. I can't scroll now for some reason. Anyway, so that's like the last 10 days. We, like I said, moved up, came back. It's just been corrective. It's been, a bit. It's been. It did a two wave pullback here in the market, and this is how I just like to go back and look at the markets, and gives me the context. So now what we're going to do is we're just going to start by identifying single prints, okay? On my platform here, for some reason now I'm getting all these weird lines, which I didn't put myself. So let me just get this fixed here. So July 29th here, let's just get this is July 29th. I would actually normally I would put notes like this, where this was FOMC, right? So they came out with their statement 29th of July. I just compare previous day's volume and all that. So that day the volume was lower than the 28th. So these are my quick ways of, I don't do it every day, but sometimes it's just to give me a good context of what's going on. So what's important in my trading is, was there fundamental news this day, which was FOMC, and then how was the volume compared to previous days, and then value. It's not complicated. So value here was at this level. The blue here is value, and then the blue here was again value. So I'm just going to put value unchanged. I mean, no real major difference in value here, right? And then FOMC. So basically I just want that to be on my profile here on the NASDAQ. Like I said, if it's a special day or anything, any kind of news that comes out, I like to just point that out. On FOMC day, what happened is really there wasn't really major important inflection points here that day. What happened is the market just basically stayed unchanged compared to the previous day. What's important in the overnight is uh, we had single print. So this was a single print, and that was a single print here. So we had two single prints here. on the July 29th overnight. I like to identify these single prints because for me these are important areas to make sure how market moves around these areas. So as you can see, on July 29th, I with Sierra Church, you're able to basically add notes to the lines that you put in. So 29th of July, uh, single print. Oh, I just like to. I generally do this for like the last, let's say, 4, 5, 10 days. If there's important single prints that were not, filled or were not retested, I'll put them out. Like this white line here is a single print that is coming back from a while here. Honestly, I should actually put a note on that. It was a single print. If we go back, we're gonna get it. What's the level there? It's 10,770. Yeah, 10,770. As you can see, look, if it extended like that, that means that it wasn't filled or wasn't touched for a while. So 10,770. What happened here? Yeah, that goes very far. Here, July 23rd. We're gonna have to identify that because we haven't really come back to that level. I'm just gonna put it here. July 23rd, single print. So that day, market went down. And that was kind of like a day where, it was a pretty solid volume day, and we had a very trending down day that day. I remember I traded very well that day. It was pretty clear how the tape was very bearish that day. So I'm just gonna put that here. That's an important inflection point. Copy that here. So that's July 23rd. And then when we extend it, you see July 23rd, we get to that single print. That same single print here has been in play. So basically the market rotated around that many times that day. And that's an important area to really identify. So if we just look at the last couple of days, so we had July 31st, the last day of the market. And basically the previous day the market was here. We had value lower and value changed here. So what's important for me on Monday, August 3rd, tomorrow, is are we just to have an overall understanding of the market here, it's just to see how if value stays either unchanged or value goes higher, that could basically identify that the markets still have more upside to go. So I really like to just identify these areas and give me a good clear um, understanding of what's going on. This is where I like to put my single prints, and I kind of like want to just put them in coloring quick because I this way I know that um, I know that we've held above this single print from the 30th, and the market has never come back to even test that. So it's pretty bullish here. So on Friday, July 31st here, what happened is, we had a gap from July 30th. The overnight traded much higher. So this gap here on Friday was basically just filled, which is, I mean, not not all that bearish or anything. It's just basically, is this a day where bulls took value higher? Did bulls just basically liquidate? If it's just a bull liquidation, um, I want to just put that as a note here. I'm looking for the type, sorry. So I like to type it in. The volume here was higher, value was higher, and a little information, long liquidation, because we had a gap filled. I think this was long liquidation, right? So all these people who had bought the bought from the previous day, with the gap, did they just take profits? If that's the case, it's just week longs liquidating and it shows that because the market opened up here and we rotated down, so we had decent selling into that single print that was from July 23rd. We basically came in, just repaired that single print, and then market never really wanted to trade back into July 30th's range. So just as structural here, we could we could see that the market kind of rejected this area, and that looks like it wants to still trade higher. That's an important nuance. It's just a market profile nuance that you get to see with time. I'm just expanding here a bit the volume profile. So we had double distribution. We had a good distribution here, and then we had the distribution here. I want to just look at the the deltas here to see if we had any important inflection points. Very clear, as you can see here. I think all these lows with all this red here with the red deltas, I think all these lows were being absorbed. The selling was getting absorbed and definitely gave a good move up. No doubt about it. This was probably long liquidation with good absorption at the bottom here. And then if we look at areas that I would like to see for Monday, even for the Sunday overnight, is I like to generally look at low volume nodes. So this low volume node will give me indication. What is that? 10,832, let's say, approximately. And then if we gap higher, we're gonna have to look into how market trades around this high volume node that was created in that overnight. So that's going to be a good level to see. And I wouldn't be surprised if, let's say, we don't have a gap up. I wouldn't be surprised that the market just comes and kind of like rotates in this area at the beginning and then looks to trade higher. That's just my quick analysis of what I could expect. Again, uh, in, in trading, you need to make sure your bias is not you're not fully attached to your bias, because anything can occur, and you kind of have to adapt and make sure that you're trading or what you're seeing and not what you think, right? Most of the time, a lot of traders have an issue with that. They think, oh, the market's going to do this, the market's doing that, but the thing is, market's totally doing something else. Kind of have to make sure that you're not attached to your bias. So this is gold here, and I have had some people ask me about what do you think of gold and all that. To be honest, I haven't traded gold for a while. I do have trades that I shared on Twitter. It's just like, I mean, the thing with gold is liquidity is not something that it's not very liquid. But I mean, if you bought at a good area, generally speaking, and you really get into a trend with gold, you could basically scale in and scale out, and it could be pretty easy if you just look at it on a momentum based trading. The thing is, I haven't concentrated enough time to look into the last couple of weeks, but I generally just glance over it and to see what's going on. I had noticed that we've had 2 days where the market had, nice moves up, and then Friday it came in and we kind of like went in, and basically we the market basically closed had a value that was a bit lower than the last couple of days. But one thing I noticed is that, this single print, these are very important areas with gold, and it generally comes back to retest these levels. I would say this area here, what is that, 1937 approximately, that's going to be a very key area. This is from July 28th. I mean, if we can't hold this, there's a good chance that the market wants to rotate and basically come back to retest and kind of like repair all this structure, because there's a single print here at 1874. I would not be surprised if gold comes back all the way to that area. We have all these single prints here. If you can see them here, we have a single print here at 1874, and then we have one at 1859, and then 1830, because gold's had a big move up, and normally it won't just come down all that easily. So it could still rotate around, and then have one day where it goes totally bearish, and comes back. It could be from overnight and during the day, and comes back to retest these levels. This is going to be important to see how gold trades around this. But then, as long as we're holding above this single print, I think we could still make a decent move up in gold. So if you look at gold's last day that had a nice move up, it was July 29th, which is here. If we clearly look at how that day was structured, is we had a down move, came to retest that area that was a single print from the 28th of July. We held that single print and the market auctioned higher. And if we look at where the market closed, I just want to see here, the downtrend here, and then I believe that sellers needed to have access, needed to control below this, and they dipped in there several times. And obviously, the last couple of trading periods here on the 29th of July, this 1950 was dipped a couple of times. Um, for the short term, I think this 1950 is going to be very important, and sellers are going to need good control below that. And if we just go to a day-to-day basis, 1939 is key for the bulls, and below 1939 and 37 area here, I think shorts could really get momentum and trade this back to these single prints here at 1892 and 1874. That's my quick analysis of the market here. This big spike here that day on the 29th. What was it, 29th? The FOMC day, basically. It's probably the FOMC, and when you have a spike here on a very fundamental day like that, this day is probably going to be very important. This day's levels are going to most likely influence the next couple of days. So I mean, Friday again closed lower. Mm, Shorts could not keep it below this 1937. I think this single print is going to be very important. As you can see, we dipped here, we dipped a couple of times, dipped a couple of times. If we really get momentum below that, that's going to be a very important area to focus on for gold. When you look at ES, it's pretty much always the same story, as ES has been having good volume in the last couple of days, and this single print here at, what is it, around 1328. As you can see, it's been extended. This has been a very key area where we've dipped below it several times, and I think that's going to be a very important area to really gain for bears if they could take the market lower. I think each market has its own levels, because sometimes what happens is ES stays around this level, let's say for a couple of hours, and rotates around it, and then Enqueue, its level, it's just basically bearish below its level. It's really each instrument has its levels and its own way of trading. Sometimes NASDAQ is just totally going down. I mean, there are legitimate reasons for that. I mean, NASDAQ has the big guys, the techs, the Apples, the Microsofts, and all that. And yes, all of that has an influence in how the index works and index trades. But I mean, I think each index has its own levels, and you kind of have to really trade them distinctly, and not say, oh well, Nasdaq's super bearish, so ES is probably going to follow too. The correlations aren't all that easy in the last, I'd say the last couple of months. It's not always been easy, these correlations. I mean, sometimes I had an example of that was discussing with the trade at some point. Which day was that? I think it was this day. Yeah, July. No, it's not that. That's not the. I think it was this day. Yeah, this is July 24th. ES looks like it's just hovering in this balance mode and all that. And if you go to July 24th on NASDAQ, it was a very bearish day for NASDAQ. It was just selling. The tape was very clear. But if you were trading ES, it looked like a very balanced day and nothing really special. So that's why I firmly believe that both instruments, both indexes are totally important the way they trade. And you gotta have to basically know the tape and the way it trades. The rotations for each index is totally different. And I used to look at the Russell too to give me like an indication of how, the three of the markets could correlate together and all that. But I've been noticing that's not been helping my trading. So I've kind of stopped looking at the Russell for now, and it's not helping me. So I'm like, look, I'm just gonna focus on the market I trade, which is mostly NASDAQ. And you know, if it's bearish, it's bearish. I'm trading NASDAQ, so I have to know what the tape is doing on NASDAQ. And whatever the other markets are doing, I'll just glance through them. But they haven't really been helping me in my trading, so I kind of like put that aside. So the way I trade, it's mostly the profile of NASDAQ on one side, and then I have my Jigsaw dome again, like I said. Most of the time I'll trade Enqueue, but I do have the micro Enqueue as well. I normally put the micro here, I have my profile, and then I'll just sometimes glance at my my regular NASDAQ quick chart, which I just have it in black just to see how we're moving up. Are we moving up with you know when we're moving down? Just a quick, just take random spots here, right? We're moving down with 6,200, 3,000, so kind of tells me like, okay, buyers are still aggressive, sellers are kind of like, you know, this was important, but then that decreased and this decreased, so this move up here is most very clear just by analyzing volume, right? Again, I'm just taking random spots here, but it's a quick visual way of, okay, well, here we went up with 6,000, and the next time we went up it was 3,000, so most likely buyers could be exhausting. 5,000, 4,000, 4,000. Selling is pretty decent and pretty constant, and then we get a huge spike in volume, but we get a bounce off of that. So most likely all these sellers got absorbed at these levels, and that's how you can. I just have the volume profile here on the side. I don't really pay attention to all the details of that chart, but it's just to give you a quick visual of how are we moving up, how are we going up, and how are we coming down. Is there a decent volume, in the upswings, and that's like the Wyckoff theory, where how volume is affecting the swings. If there's decent volume with the swings going up or down, this just proves the conviction behind the move, right? So I wanted to do a short video here just to basically cover the blank market profile, and how I spot my areas to see what goes on. So again, if I see NASDAQ coming to 10,774 here, I want to see if sellers get aggressive below this. So that could quickly tell me that, okay, well, I think the market wants to go lower, right? That's already a quick bias, and I know my levels. It could go lower from 774 to all the way to 672, which is a 100-point move. And if it stalls here and we have a hard time going through it, that's where I know that, okay, most likely we could rotate between this 100-point level here. I don't expect the market to really go down because, especially on NASDAQ, that's my expectations quickly here. The single print here was closed and we dipped below it a couple of times. The single print coming from the 23rd of July, so that's a decent area that was extended, and it looks like the market absorbed all this selling here. So most likely market will open up higher, either a gap up or maybe just stay in this range. Like I said, that's my quick bias, because I believe that this gap from from the 30th, on the overnight, traded very narrowly here, and then we came to close a gap and we closed above this 10,773 area. So most likely, and we closed at the session highs, so there's a good chance that the market will either gap up or just open up in this range. Quickly, some little detail that I wanted to also cover, um, the volume profile. You see we had a double distribution here. What's important are the low volume nodes. How are we trading with these low volume nodes? This low volume node here, as you can see, if the market came above this, you know that we have a good chance of rotating back into this high volume node. Um, I used to always point out the TPOX, the time point of control. So the time point of control here on this day, which is again July 31st. Um, I like to put that in blue. Just gives me context. That's not the one. Sorry. So that was 1, 2, 3, 4, 5, 6, 7, 8. So that's 8 wide. That's pretty prominent. So in the future, when the market comes back into this area, there's a high potential, a high probability that the market won't just go through this very easily. You know, it's because we spent a lot of time here, and the fact that there's also this confluence, sorry, with this with the single print that's important here. I'm just going to adjust this here. Sorry, that's not what I do. Here we are. So basically, this level for the future will be very important. The 762 to 771, give it 5 points around there. This single print with this time point of control that we had here is going to be very important. On the upside, again, on the upside, I think it's here. This single print that we had here is 1070. Sorry, that's not the level. Where are we here? We're lost. Okay. So, you know, this point of control that was extended here, 1138. It's mostly likely a point of control that's pretty prominent here. Going back July, what is it? July 13th, 14th? Yeah, goes all the way to this overnight session here. So that's probably important. As you can see here, July 20th. Look at all these single prints we had. This was totally crazy structure. You know, when you have all these single prints and then the fact that we closed most of them within 1 or 2 days, that was a crazy day there, July 20th. It just proves how NASDAQ was basically fear of missing out, very aggressive buying this day. And all we did is we kind of like got those guys to liquidate, right? They liquidated for sure. And then we had a decent several days where we had balanced market, and then we had a nice move down here on the 23rd, which, you know, all this balancing for the last couple of days, and then the 23rd, it kind of proved that this market wanted to trade lower. So as you can see, the single print, these single prints, 10770 and 11650. Look at how the market responded to these areas, you know, like the overnight, this single print here, and then this single print, we traded around it several times. You see we kind of closed below it, came to touch it several times on the 28th, which is was it the FOMC there? And then, you know, again, we had a hard time getting through it again here on the 29th. And then that same level, you know, we came back and we converted that level into support. And then we created another single print here, which also became support. And looks like that area is going to most likely be very important going forward. If you want any bears or any kind of important selling to be occurring, we need the sellers to take control below this level. That's pretty much a very clear uh, nuance here on the market profile. If you really want to be a seller, make sure price gets below this. I mean, below this, we're going to get good selling, you know? So that's pretty much it. Hope this helps. I do share a lot of my trades on Twitter, so make sure to follow me there, and don't hesitate to contact me through Twitter there. All right.